Hey everybody, welcome back to REI Launchpad. Today we're going to be talking a little bit about how to source properties in 2024, what that looks like in this current market, maybe some strategies people are using, some of our experience that we've had in our purchases of both flips and long-term, buy and holds for rentals. And so we're just going to kind of go down, talk about some things that have worked for us. Of course, it's just our personal experience, but we'll share with you our strategies, pros and cons to both, and how they might serve you to be able to find some properties of your own. So each one is a little bit different, but they're all effective and are all great options. And will really just kind of depend on where you're at with finances, will depend on where you're at with connections, where you're at with, um, just your different resources that you have available. But lots of good strategies here. So if it's okay, Chad, why don't you go ahead and start off talking a little bit about sourcing properties through the MLS and what that looks like.
Yeah, so MLS is a huge resource. For those of you that aren't familiar with what it is, it's the multiple listing services. So that's everything that's on the market in a particular market. And so you can go out and look on sites like Zillow or Redfin. I prefer Zillow. Um, there's a lot of really good opportunities to filter through. Um, Properties and look at the factors that to look in a specific area, to look for a specific number of bedrooms, um, and also just to kind of it helps to sort by price and sort by these different factors, so you kind of bubble the things that you're interested to the top, right? So you have that opportunity to go out and look through the MLS listings there. But in addition to that, you should really find an investor-friendly agent, and they'll bring you deals that are on the MLS, that are coming onto the MLS and may not even have made it there yet. And when I say investor-friendly, I mean somebody that don't just pick any agent. An investor-friendly agent understands what an investor is looking for. They understand the numbers, um, and they're not going to just kind of bring you properties when you say, "Hey, I'm looking for a house in this particular zip code." They're not just going to start sending you listings. They're going to look through the ones that have opportunity in them, right? That have cash flow opportunities, that are in good rental areas, that if you're a flipper, that need work, and then also they understand through the deal how to speak for you in the transaction. So take a look at those listings in your area, and then find the deal analysis calendar, or find the deal in time and start working through it. If you're a flipper, there's lots of calculators that will kind of help you through that math. If you're looking for long-term rentals, you'll find calculators for those as well. I know Bigger Pockets has pretty much all the calculators that you might want in it, and you can use them for free a certain number of times. But just the more deals that you work through and the more deals that you analyze, the better off that you are as you begin to get familiar with what that math looks like.
If you're brand new and you're trying to identify like your market in what you want to buy and where you want to buy it, Zillow is also a great option to say pick a particular town or two towns and just watch them often to see what's selling, what's coming up on the market. And just watch those prices, because if you study and keep an eye on Zillow and in like a town or two towns and everything's selling for $250,000 and one day something pops up for 175, very quickly, hey, I should look at this. So studying those markets and using Zillow that way is a great option. That way you're not necessarily calling an agent every day saying, hey, this property just came up, is this a good deal? Get familiar with whatever market you're in, and Zillow, to your point, is a really great resource for that. Just to learn about that area. And it'll take time to really get established on your knowledge base. But if you keep watching it and watching it, that it's a really great way to do that.
Yeah, that's I have I'm real big on kind of investing locally, right? And becoming an expert in those markets. And the more houses you look at for that, and those markets change as well, right? So the
Yeah.
information, especially right now in the last few years, those markets are changing,
Mhm.
from month to month. So the more you look at them, you'll see those trends. It could be trending up, which it has been, but in the
Yeah.
future it could start trending down as well. And the
Right.
more you look at, the more you understand that.
Yeah. Another thing I would add too is over the last few years, the markets kind of nationwide have been growing exponentially. And days on the market really short, a lot of competitive offers, sometimes, going above and beyond asking price and just being very aggressive with offers. And that's shifting. I think the MLS, I've personally bought maybe one or two things off of the MLS over the last couple of years, but and my wife is an agent. Um, there just hasn't been a lot of great deals that I have seen that I felt like I wanted to pursue because it was very competitive. Um, that is shifting, and I think that there's a lot of opportunity right now to have an agent send you deals that maybe have been on the market for 60 days. They can go out and target, a select category of properties that maybe have been on for a long period of time where those sellers are getting a little bit more desperate to sell. And it might be listed at a certain price and you can negotiate a lot harder with them to send them not like I would call it a lowball offer, but to send them on a more aggressive offer to where you can make the numbers work on a property that at full asking price may not work. So that's another thing too that I think in today's market on the MLS, where properties may have been more challenging to find over the last couple of years, I think you can utilize that strategy in this coming up year as things are cooling off. That could be a good strategy to be able to target properties and maybe find some good deals. Well, Gabe, why don't you share a little bit about direct to seller, what that might look
Yeah.
like?
Yeah. I think this is a great one. There's lots of little things in the direct to seller. So, I guess starting with the bare bones, what is it? It's you acting as, no intermediary. So there's no agent reaching out to that seller on your behalf, or a wholesaler, which we'll talk about here shortly. It's you going out, whether that be driving for dollars, putting in sweat equity, however you can, but you're reaching out to the owner directly, letting them know that you are interested in purchasing their property, and either Airbnb it, flipping it, whatever, but letting them know that you just want to purchase their property. And there's so many different ways that you can do this and get creative. I think this is a really great one for all beginners because it just takes time. A lot of times, we're worried about, well, we don't have the money, so we don't want to go to an agent and waste their time, even having them set up a search, because then what happens if we find a house, or different models sometimes require you to have capital. Direct to seller, you're already at an advantage, because if you find a property that is off market, meaning not listed on the MLS, not listed on Zillow, for sale, you can then bring that deal, depending on how good it is, to someone to partner with. If you have the knowledge base, or someone who would be interested, that you bring a lot of value when you bring a deal, because that's what people are looking for. So I think direct to seller is a great one, and there's, like I said, different ways of doing that. You can go door knocking. You could knock on the door. You pull over, you see a property that's distressed, knock on the door, real friendly, let them know your intentions. Hey, I'm Gabe. I was driving by I'm local to the area. I was driving by the property, and I'm really interested in purchasing your property. Have you ever thought about selling? That at least opens up the door, for conversation. Say they don't answer, well, then leave a note. A handwritten note goes a long way. Same thing that you would say to them in person. Leave your contact info, and it's a lot more personable than those signs that you see posted up. We'll buy your house for cash, or calling them. When they don't know who you are, or many of the different other methods, right? So I think that's super valuable when you can just leave a handwritten note or talk to them after knocking on their door, and be that friendly, personable person, right? Another way, which has been really popular in the past, man, 5, 6 years, is what they call driving for dollars. And that means if you have a car, you drive around the neighborhood that you want to invest in, or that investors in your area are investing in. You identify those properties that need rehab, that could make a great Airbnb, or every house on the block's flipped, so it could be a great rental, or a flip property, right? And you basically just identify a list of those properties, and at the end, you're able to, depending on how you do it, basically what they call skip trace. So find the owner's information, and send them a postcard. You could personally just write down all the addresses and mail out letters if you want to do it that way. But the most important part is driving for dollars, hopping in the car. If you don't have a car, get on your bike, walk, and identifying a list of properties that you say, hey, these would be great opportunities for someone to invest in. I would love to be a part of it. So then you send out a letter to each one of them, or the app Deal Machine. You basically drive around, click the property, it adds it to your list, and then through them, you can actually send them a customized postcard. You choose how you want it to look, what it says on there, and then I think it's like 65 cents per postcard you send to them. So you find 10 houses, it costs you $6.50 to send out one batch of them, right? And it says your info, and then who knows? We've heard stories where people have kept a postcard they've gotten from someone, because they liked it, or a handwritten note. They may never call you, right? And they may call you a year later, 6 months later, and then they say, hey, you drove past my house, you took a picture of my house, and you sent me a postcard. You said you'd be interested. Are you still interested? Or, hey, that I went by that house for the first time in 6 months, and I saw there was a note in the door, and it was from you. That's actually my mother's house. She passed away. I am looking to sell it. Are you still interested in buying it? Right. So the model direct to seller is great, because you're cutting out the middleman, and even an opportunity for you to be a middleman. So I know Chad will talk about, or Mike will talk about wholesalers, but that's a great opportunity to get into even wholesaling if you wanted to just wholesale the property.
Yeah, that's fantastic. So you said Deal Machine is it's an app.
Yeah, Deal Machine's an app on your phone you download. I'm sure they have I think it's like $100 a month. I think you do get a free trial. And then basically you drive around in an area, you click start like you were on Google Maps, and it tracks everywhere you went. It tracks what you're near. So you just tap on the property. It'll show you, oh, hey, this is owned by, and then sometimes it populates a phone number for you as well. So you could cold call them, or you can just send them a letter. I mean, you're in front of the house, right? So you can send them a postcard, and it'll even tell you if there's a mailing address on file, and that'll mail the postcard directly to that mailing address. So
Another really good opportunity with direct from seller is if you're in a small market and you want to become an expert, say like in your hometown, and that's something I've done. I've picked some really small markets and I've become an expert in those. You'll learn who owns the properties in those towns, right? You'll find out quickly just by going to sheriff sales and looking at county records who owns the most properties. And then you'll find those investors that own those properties that are retiring. And when you get an opportunity to go and meet those investors, those retiring investors, do everything you can to form that friendship, form a relationship with them. This is something that I've been really successful with. Take them out to lunch, offer to do things for them. If they're having problems with their rentals that you can solve those problems for them. And then when it comes time for them to sell, they'll come to you and ask. if you're interested. So that's a really good opportunity and not one that very many people ever talk about.
Yeah,
Just learn your local investors, become friends with them. That will create opportunities for you as well.
that's awesome. Yeah,
Yep.
another really good thing about driving for dollars is that if you can look on Zillow all you want, you can, even, I'll share about wholesalers, but you can get emails from wholesalers and, all this stuff says, oh, this is a great area, great house. But until you set eyes on that area, you never know if it's a place you want to invest or not. So that is another really big benefit to, getting out there, seeing a neighborhood, setting your own eyes on it is you're going to get really comfortable with a particular market that way too. You're going to learn really quickly what streets to avoid, what streets you really like.
Yep.
Is there an industrial warehouse next to a property that, maybe the pictures look really good, but then there's this toxic wasteland right next to it, right? And you don't ever want to own a rental there, right? So that's a really great way to just get out, get familiar with a particular market, and like you said, that's free. You spend a few bucks in gas, and you learn a lot. So I alluded to before, for me, almost every property that I've bought over the last few years has been from wholesalers. So for those who aren't familiar with what a wholesaler is, if you see, Chet and Gabe both talk about, like, the signs in the yards. Sometimes they call them bandit signs, or says like, I buy ugly houses, or things of that nature. And what those wholesalers are is they are finding distressed properties that people want to sell quickly. They don't want to deal with putting on the MLS because they don't want people walking through their home. They don't want something that they have to fix up. And they are listing that property through a wholesaler to get a quick sale. Maybe the house needs a lot of work and they don't want to deal with it. Maybe they live out of state and they just inherited it. So a wholesaler basically finds these properties, and they'll get it under contract with the owner, and maybe they get it under contract for $100,000. Then they'll turn around and they'll email out a whole blast of emails to investors like myself and say, hey, I've got this property and it's $120,000. So they're sourcing these deals and they're making the money in the middle. They're making a little spread, and they don't have to fix anything. They don't have to do anything. And some might say, oh, well, that's terrible. They're going to make $15,000 just for shuffling some paper. Well, that's okay, because they find some really good deals. And, I don't have time to go out and drive for dollars these days. I don't have time to send out, a million postcards or whatever. That doesn't interest me. It does to some, and it's a great business model. But for me, I am happy to have them source the properties, and I get a good deal. Sellers have a good deal, and then the wholesaler makes a good profit. So it's a really great resource. So a way you can find those wholesalers that I recommend is Facebook is a great start. You can go onto Facebook and you can search for uh, real estate investors of your town that you're in. And then from there, you're going to see a lot of people who are wholesalers, and you can just message and say, hey, add me to your buyers list, right? Say, and they might ask you, what's your criteria? Say, okay, I'm looking for distressed properties. I don't want something that has to be stripped down to the bare studs, or I'm looking for rentals. It needs to be in really good shape, so I don't have to do much. Give them what you're looking for, or just say, hey, send me everything you get, right? Because maybe you're learning what you want. That's a really great way. Also, local meetups. If you go to any local real estate meetup, there is going to be wholesalers there, and probably a bunch. And some are better than others. And that's okay, because sometimes really, really good wholesalers get good deals, and sometimes novices, starter, investors, wholesalers get good deals. You just never know. So it's good to get on their list and see what they come up with. That's a very, very great option for sourcing properties. And, you're going to get a lot of stuff sent to you that isn't going to fit your criteria, but that's okay. Same thing as before with MLS, what Chad talked about is everything that comes across, take a look at it, crunch your numbers, and see if it makes sense. But that is definitely how I've been sourcing properties over the last couple of years.
Yeah, some of my best deals have come through wholesalers, right? Some
Yeah.
long-term, some of my long-term holds have come through wholesalers, and then also good opportunities to flip. And that was really difficult for me as an investor after years of not paying someone to source properties for me, right? The times were changing, the competition was increasing.
Yeah.
Wholesaling was really an up and coming thing, 6 to 10 years ago, somewhere in that area, and it was difficult for me to swallow that pill. Hey,
Yeah.
I'm going to pay somebody, $7,000 to $15,000 to source a property for me. Once I kind of overcame that mentally,
Yeah.
that allowed me to make a move on those properties, and I've bought some really good properties through wholesalers, and
Yeah.
I'm really happy they're out there doing the hard work, right?
Exactly.
It's not a lot different than paying a realtor to sell your house, right?
No. If you ignore, forget about whatever they're charging. If whatever they're asking for, if you would look at that and say, hey, that's a good deal, then who cares what they make in the middle? It does not matter. Is the house a good deal? Can you flip it? Can you rent it? That's all that matters.
That's
You're
right.
exactly right. Yeah. But yeah, that can be a big hiccup. You're like, oh, I'm not gonna buy from them because they're it's a ripoff. It doesn't matter. I mean, you always say they're kind of they're a part of the team, you know. They're the somebody who's going out there and sourcing these deals. They're just like the painter or the plumber. They are serving a great purpose in helping find a property. So same thing with realtors, right? Both can be very valuable, but some people get hung up on that the fee that they make, and it's irrelevant. It's irrelevant. If they found a good deal, good for them, and good for me, and good for you, right? So yeah, that's a really good point. So you
Yeah.
mentioned sheriff's sale and sheriff's county records and stuff. You want to share a little bit about what a sheriff sale is, and um, yeah, what does that look like? I think we've all heard that term before, a sheriff sale or a tax sale, which those are two totally different things. But you want to share about that, about what a sheriff sale is and how you get properties that way?
Yeah, so sheriff sales it's a court-ordered foreclosure on a property. And the first part of the process is for the bank to determine what's the minimum they'll take for that property. And then it has to go to a live auction at the county sheriff's office where that property resides. So just become familiar with your local sheriff sales. You can find those by going to your sheriff department websites. You can find out what days they're on, and then they'll also have a list of the properties that are up in an upcoming sale. So something I do is I'm constantly monitoring that list and determining what the next date is. Then they'll put the addresses in those lists. Every county sheriff site's going to be a little bit different, but once you get there, you can figure out, how they format those websites, how they format their lists. The closer you get to the sale date, the more information is going to start coming onto those lists, right? So you'll see that properties fall off the list, and then you'll also see that they start including prices on those properties because the banks are determining what that minimum bid is that they'll have on those sales. And then the day before, the list is changing constantly up until the moment of the sale. So you can't ever bank on anything. And one thing is for sure that there's going to be competition when they're trying to buy those houses.
Yeah.
But here's the catch with sheriff sale, and there's no real way around it. You have to have liquid cash. If you don't have cash, you're not buying a house at a sheriff sale. So if you could go bid on a house and you were to secure a house for $42,000, let's say at a sheriff sale, few hours later, before the sheriff's department closes for the day, you have to present them with a money order in that amount, right? And at that point, you own the property. Now, there could be some there could be some issues with that property, and that there could be the resident may still be in there. In which case, you would have done your legwork before that. Maybe I should have mentioned it before that anything that I'm interested in, I'm going to go drive around within a week of the sale because I want to see the actual condition of the property, but I want to see if there's anybody living in the property, right?
Yeah.
And sometimes the properties can be unlocked. Legally, you're not allowed to go into those properties. So I'm not suggesting that you do that. But oftentimes those properties are unlocked. You can see through the windows, personal belongings. If there's cars in the driveway, would not approach the house. But you can determine if somebody's living there or not. If you buy a house at a sheriff's sale, you present that check for $42,000. That house is yours. There's people living in it. What do you do at that point? And I'm not saying that you shouldn't buy a house that someone is in, but that does present another issue that you have to overcome, and that's removing that person from the house. And a really popular way of doing that is cash for keys, right? So just approaching them very friendly. You never approach them with conflict. This, I own this house now. You need to remove yourself immediately and all of your belongings. That's not approach. You have to be very diplomatic when you approach these folks because of what they're going through in their life. But the fact is that you own the house and they do have to move. So they are going to move one way or another. So you can offer them cash and they can make that easy on you. You know, I would start at somewhere around $500. Say, hey, look, if you guys can get out by tomorrow, I'll give you $500 cash. I'll take the keys to the house, and then immediately when they leave, for changing the locks, you need to secure your asset. But that is an issue that you do need to be familiar with when buying with sheriff sale. But I think the biggest thing that precludes people from being able to buy those properties is the cap. You can't use a hard money loan. You can't use private lenders usually because you have to come up with that money within a couple of hours. So
I do know as well too, every county will probably function a little differently. Some will do them every month, some will do them every quarter. One of the counties near us, you actually have to take cashier's checks in before the auction even starts. And so, check with your local sheriff, as Chad recommended, you'll need to call them, ask them what the process looks like. How does that function? Each one will be probably a little bit different. Chad, I think both you and I have bought properties that were occupied. I ended up having to go through the eviction process, like a full-fledged process, because they wouldn't leave. They weren't interested in going anywhere. So we had to hire an attorney and do a John Doe eviction because we didn't have the exact people's names, so we just did an eviction, and it took a couple months, but they were eventually had to move out, and we took possession of the property and did our thing. So but it is certainly something to be aware of, that if there are individuals in there, it could be problematic. I know you bought one recently that looked like somebody was there, and thankfully they were gone by the time you closed. So they did get out just in the nick of time. So that was good. Another thing to be aware of is there are always possibilities that there could be liens against the property at a sheriff's sale. Typically, they're supposed to be removed, but I think, have you ever had properties that had liens on them after you closed?
yeah, I was actually going to talk about that. I have actually, but I also hire somebody beforehand. So a couple days before the sale, I've got a title company that will go in and do research at the county. They'll go in and pull the records and look for those liens. And there are a few times where I thought for sure I was going to be buying a house or I was going to be a bidder on that house. And they've come to me and saying this is not a house that you want to buy because of some kind of lien, right? And they understand that when you buy through sheriff sale, all of those liens are supposed to be cleared off. But depending on the position they're in and the type of lien they're in, it could be a tax lien, it could be a lien from a contractor. it had done work. And one that I had to pay, it was a lien from the county. The county had hired some contractors to go in and mow. So that's just something you got to be really careful about. So, I hire this title company. I think I pay them $25 per property, and I may have an interest in 3 or 4 properties. So if I'll spend 75 to $100 going into a sheriff sale just to make sure that I don't step into a hornet's nest.
Yeah, it's cheap security there and peace of mind.
So, Gabe, why don't you spend a minute and tell us about arbitrage and how you use that?
Yep. Arbitrage is great. I think it's another one for beginners. Does require a little bit of capital, but without getting too much into the nitty gritty, you can certainly do it with little to no money at all. So I personally have gotten into arbitrage through Mike and Chad. They own an apartment building. I came to them, and I said, hey, look, this is what I'm looking to do. I want to rent one of your properties, one of your units at your property, and then I want to list it on Airbnb. I'm going to pay you rent as normal. It'll be on time. I just need your permission to utilize that property as a Airbnb property. I'm going to furnish it. I'll handle most of the maintenance. I mean, it'll be cleaned it before and after each guest, so it'll be taken care of. We can install noise monitors to make sure that no one's disturbing the other tenants. Um, and Mike and Chad were on board, and since then we've had those units for now going on 2.5 years. So they've been great properties. They generate great revenue, and we certainly cover our overhead. With those properties. Like I said, low barrier to entry. Takes a little bit of sweat equity. Calling owners if you don't have anyone. Like I said, I run a property management group, so we get properties brought to us all of the time. We don't even do the legwork. From flippers that flip the house, they spent too much, or now it's not selling, they have to hold it. And they come to us, they say, do you have any clients that want to rent it and lease it on Airbnb? We're fine with that. So it can be as simple as going to Zillow and looking at properties that have been on for that long, or asking your realtor to, hey, can you pull a list of rentals that have been leased or for lease for a while. And typically, just like any other seller, they're going to be motivated. So that's where I would start, and then just pick up the phone and call them. I would steer clear of property management groups. Typically, they're not going to want to mess with that too much. But single landlords, they're definitely going to be open to hearing it at least. And then from there, you can continue your negotiation. We've done it to where we've put down no security deposit on some properties, or our clients have no security deposit on a property because they sell themselves so great that they're going to have a noise monitor. They're going to have routine maintenance done on the property. They're going to have the cleaners come in after every single checkout. They're going to do quarterly, monthly, weekly checklists, whatever they say. No security deposit. We've had them where they've had no security deposit and delay the first month. So you are actually able to generate income before even paying anything on the property. And then you obviously have to furnish the property. You can buy a lot of good stuff on Amazon, a lot of cheap stuff at Walmart. And then how do you finance that? Well, I would recommend starting an LLC, applying for a tax ID number. It usually typically costs about $100, and then you can open up a business line of credit from there. And typically they have offers of 0% interest for 18 months, for 10 months, for a year. And then you're able to again start making money. Now, obviously, pay off that credit card before any interest hits. But you can put a lot on that credit card, and then every month you get paid, start paying towards your credit card. And you can seriously get started for almost $0. I mean, pay to start up your EIN and your business credit. But I mean, it's a great opportunity to where you can start an Airbnb or a midterm, which is for traveling nurses, which we do. And actually, both units we have right now that are arbitrage, that are my personal units, we have traveling nurses in. Rent maybe $900 and we charge 1,700, something like that. So there's a pretty good spread in there to make quite a bit of money. while still keeping the owners happy. The units occupied were great tenants because we take care of, most of the minute little maintenance issues that come up, and clean the property after every guest. So yeah, I think it's a great way to get started in short-term and mid-term rentals for sure.
Yeah, that's a really great method for a beginner to get started, right? I mean, you're really selling yourself as much as anything. I mean, you have to convince them that your method is solid, that the model that you're using works, right? That you're selling yourself in that and building that relationship. And a lot of real estate has based on relationships, right? And I can speak from an investor. When someone comes and approaches me about a rental and they want to use it in a different model, one thing that they have to do is solve my problems. You have to understand the investor's problems, and then um, you have to pitch to them that, look, I'm going to solve the problems that you have. I'm going to solve the fact that you don't have to evict anyone. I'm going to pay you rent on time every single month. I'm not going to be damaging your property because I'm going to, have ongoing maintenance on your property. And so there's a couple different models that can use rental arbitrage, and Dave mentioned a couple of them being short-term rentals and Airbnb, and mid-term rentals, and then also one of the models that I use in my property, which is transitional housing. Also, a lot of people use rental arbitrage for that, right? So in the same sense that they're going in and they're just pitching the model and saying, this is what I'm going to do, and the ongoing problems that you have are going to disappear, right? You're going to get your money on time. We're going to take care of your property. You're not going to have to evict anyone, and you're going to have 100% occupancy,
Yep.
right? And I am a long-term tenant.
Yeah, yeah, no, I think it's great, and I think too, it's like we touched on, but I really, really want to hone in on it that it's all about selling yourself and solving problems. Those are the most important things. We've seen multiple clients get multiple units at a building offered to them because they said, "Hey, here's my goal. I want to rent at least 10 units from you. It could be a large multifamily building. I want to rent 10, 20, 30, 40 units, whatever you tell them. Be serious about it." But they're going to be happy. They're going to say, "Hey, you know what? Let's start you with three. Let's start you with two." But once you get those up and running, they're generating income. You're paying them on time. They're going to want to give you more units. So yeah, it's all about selling yourself and being true to your word. If you're going to install noise sensors and cameras, you tell them you're going to do it. Do it. It's going to help keep the other tenants happy, right, and keep eyes on the property. So
Yeah, that's awesome.
Guys, thanks. Really good conversation. Let's continue real soon. I think the next recording we're going to do, let's talk about ways to fund these deals. So maybe you've found a good property, whether it's a rental or a flip. But how do you pay for that? How do you get started, especially if resources are slim? So I think next conversation we'll have, let's chat about that. And thank you everybody for joining us. We're glad you're here at REI Launchpad. We are thrilled to see you succeed and grow and build your net worth, build your cash flow, and build a life that you're proud of and that you're excited to wake up to every day. And thank you for letting us be a part of that.